Jacksonville, Florida. Here to really appreciate everybody taking their time out of their busy day today to talk about my favorite subject is builder's risk insurance. I will say it's pretty interesting that, over my career, I've spent a lot of time talking about this one line of business. And it's very, I almost take it as when I think about builder's risk, I get a very positive thought because I know all of the coverages that are represented there. So a lot of times it's a specialty line that people don't think about a lot. So I almost think about it as, I take credit for builder's risk. Not really, but the idea is it bears discussing at greater length. One of the questions we get almost on a daily basis from agents is like, is this thing really necessary? Is builder's risk really necessary? So I thought, why don't we do a webinar and we'll try our best to answer that question. And maybe at the end of the webinar today, we'll think to ourselves, what do you think now? Is it necessary? Do we really need this line of business? I think you'll come to the conclusion that I want you to, but I want to talk about it for the next 20 minutes or so, and then we'll open it up to questions. Once we get to the question and answer, anything to do with builder's risk is fair game. So feel free to ask me anything you want, and we'll do our best to get you an answer. So once again, Jeff Benson, Victor Insurance. I'm the program manager for builder's risk. We write builder's risk every day. We love the line, and we're going to talk about it. So first of all, is the builder's risk necessary? It's a logical question, so let's think about that a second. First of all, when you think about, sorry about that, let's go to the previous. When you think about insurance in general, we're all taught early on that it doesn't really reduce risk, it just manages risk, it spreads the risk. So with that theme, we'll think about this. So how do we manage risk? I mean, we can't eliminate risk, but we can manage it. We can pool the risk. So I thought to myself, everything that's involved in builder's risk, how does that help manage risk? So if you think about a construction project, and for the sake of discussion today, builder's risk, another name is course of construction coverage. That's a very prevalent term that's used on the West Coast. They mean exactly the same thing. Another term you'll hear a lot of is installation floater. Kind of the same type of coverage, installation floater, builder's risk, course of construction. This is an inland marine line of business. It's primarily a property line of business. It's designed to cover materials that are in motion in a project in the job site. So think about a building being built and everything that goes into it. We start with labor, materials, and overhead. We all understand what labor and materials are. Overhead would be everything else that's involved in building a construction project. We also have profit, soft cost, loss of income. We've done webinars on all of these different aspects of builder's risk, but this is what it does. It helps us spread the risk over, so we're protecting our insureds. We'll talk about who our insureds are in a minute. So you kind of get the idea of, let's go to the next slide. I think makes more sense when we get to it. Any entity with a financial interest in a project can be covered on a builder's risk policy. So these are the ones that come to mind. First of all, the general contractor, the owner of the building, you could say owner, maybe the developer, another name for that, the subcontractor that's involved on a job site, and lastly, the lending institution. They all have a financial interest in the project. So depending on who your insured is, that's how you're going to look at this business. So if your insured is the lending institution, you got to make sure their interest is protected as well as you can. So as an agent, first question is, who is my insured? And then second question is, how do I protect their interest, the financial interest in that project? This is the other thing I think about. Is it really necessary? Okay, so let's take the example of we have a custom home builder that's going to build 5 houses a year. Each home is valued at labor, materials, overhead, profit at $1 million. So he's building 5 $1 million homes. Let's say he decides, I'm only going to insure 4 of them. I'm not going to insure the 5th one. I don't think anything's going to happen to it. All right, so now he's building that 5th house and it's 99% complete. and he's had no claims, everything's fine. He's like, see, I didn't need the builder's risk. But he hasn't closed on the house yet. He hasn't closed on it yet. And this is August in South Florida. So he hasn't closed on the house yet, no claims, so he's ahead of the game, didn't have to pay any premium. But we all know what happens in August in South Florida. A little tropical storm brews up and now starts heading directly for a house he chose not to insure. So now that little custom home builder that builds 5 houses a year has $1 million of exposure uninsured with the storm bearing down on it. Do you think at that time he's going to say, I made the right decision and not insuring that structure? So I think part of what we do as agents is just point these type of scenarios out to the insureds. Now, the next question is, how much would it have cost me to insure that $1 million house? Now, there's a lot of different variables that go into the cost, and I won't get into the exact price of that one house, but it would depend on the protection class. It would depend on the distance to the water. It would depend on what deductibles you choose. So there's different variables that go in. What is the construction of that project? But needless to say, we're looking at pennies on the dollar to insure that structure. So at that time, they're going to say, I wish we had had that coverage. So once again, I think, is builder's risk necessary? I think it kind of goes without saying, but you simply have to remind either the lending institution, I think, gets it. The banks are going to require you to get it. Probably don't have a choice. But I have had some general contractors that will say to me, well, I just require the owner to get it. Owner's getting the financing, or maybe the owner's paying cash. I don't care. Well, think about not just labor, materials, and overhead, but think about profit, loss of income, things of that nature that the builder has exposed. Same thing applies then. The builder is going to say, man, you're going to point out to the builder, I think it's worth your while to carry this coverage. Simple as that. We get a lot of this. Sometimes there's a lending institution involved, the bank's involved, and the bank's going to say, you have to carry coverage and you have to name me as an additional insured or as a mortgagee. So contractually, you have to do it. Okay, that makes it kind of an easy sell. I will warn you there, though, make sure that you have the right coverage form, make sure they're added correctly, that their interest is protected, because they're not all the same, by the way. But here's another example. We had this happen the other day. Someone was building a pretty nice home in a protection class 10 on top of a mountain somewhere, and it was a really wealthy insured. They didn't need financing. They were paying cash for it. So the agent called me and said, well, I was thinking about builder's risk for this guy, but he's paying cash. He doesn't really have to have it. Nobody's telling him he has to have it. So I thought to myself, $1 million house being built on top of a mountain, unprotected, fire. There's a lot of things that can happen to that house, so you got to point that out to even the wealthy client and say, how about for pennies on the dollar, I could protect that home in case something does happen to it. And so I think you just point that out. I don't know how they could afford to not carry builder's risk. Simple as that. Another thing I talk about is coverage and exposure. So we all, every structure being built has a lot of different things that could happen to it. We could go through all the scenarios now, and sometimes I do think the best way to sell builder's risk insurance is to point out things that do happen every day to construction projects. And we can count on the top of our head, we could think about things like vandalism and theft on the job site. We could think about, obviously, the big ones are the fire or the catastrophic exposures of the wind and the earthquakes, flooding. All of those things could happen to a construction project, every project in the United States. Some of these things are more regionalized than others. So maybe sinkholes aren't a big problem where you are, but they are a big problem in other parts of the country. I'm going to point that out. That could obviously swallow an entire structure. So there's a lot of different ways to think about coverage and exposure, but you definitely need the coverage. I put this thing in there about sleep insurance too. We've kind of always used sleep insurance in terms of when we sell insurance to the insureds. Well, what about as an agent? As an agent, I think I would like to make sure that all my construction insureds, be it general contractors, subcontractors, owners, anybody involved in the project, anybody, I've done my best to explain builder's risk to them. Labor, materials, overhead, soft costs, loss of income, all of those things, everything that goes into a project, I can cover for you on a builder's risk policy at a very, I won't call it inexpensive, but I will say pennies on the dollar to cover the exposure. Simple as that. So I would think as an agent, for me to sleep better, I want to make sure I pointed all these things out to them. Think about that tropical storm that's heading right towards one of your insured's job sites. You want to make sure you explain to them all about deductibles. You think about deductibles, name storm deductibles, percentage deductibles. Make sure they understand the risk they're taking. Simple as that. This is another way of looking at it too, as far as, when I think about the cost of auto insurance and workers' comp and general liability, umbrella coverages, and all the things that are out there, builder's risk is relatively inexpensive. It's definitely affordable for what it covers because it's very, very broad. So many different things could happen. It's all covered on this form. I think it's goes without saying it's a great coverage for the cost. You need to also explain to each insured, kind of as you talk to them, you'll get an idea of their risk tolerance. I have some builder friends of mine, and they're very, very comfortable with large deductibles. They just have always done them. They understand that small claims will not be paid. Definitely in coastal areas, you need to explain percentage deductibles, percentage wind deductibles. Like I said, name storm deductibles. More and more builders understand that, but you need to make sure they really understand it because some of these deductibles add up. And, it's not a problem. Maybe you're getting enough savings on the premium up front to justify the deductible on the back end. Everything's fine. You just got to make sure you explain it to them. I would always present different quotes for the builders just to point that out too, and maybe give them a claim example. Say, okay, now if you have a 3% wind deductible, and this is the way they calculate the 3%, if the home is 99% done and the storm blows it apart, here's what you're going to be responsible for. They say, oh, what if you had a 1% deductible? Or what if you had no wind deductible? I mean, there's different ways. Sometimes the market will dictate what you can offer. But by all means, I would offer different risks, different ways of writing it. The language on the policy form, they are not all the same. That's all I can tell you. I've seen all kinds of interesting ways that carriers either cover things or don't cover things. Could be because this is inland marine coverage. It's not as controlled as some lines. So you'll see all kinds of things done by the direct writers, by this and that. You just have to literally look at the form that you're selling. Another reason to carry insurance is to get the claims expertise. Okay, so it's all fine if there's never a claim. If there's never a claim, we're off and running, everybody's fine. But once in a while there's a claim. So that's when the insurance carrier really steps to the plate and says, okay, now we know the windstorm is hit. We're going to send our adjusters out right away. We're going to get you settled. We want to get you back in, where you were before the storm hit. It's all very important. So you're really paying for that claims expertise. You really need an inland marine claims adjuster that understands soft cost, that understands the loss of income, and the time element coverage is built into these forms. Our form has 19 additional coverages automatically. They need to understand those. We have optional coverages that you could choose also. So you need an adjuster that understands the form. Make sure that the insured has the claim contact information. So much of this is what I've been involved in, especially lately, is if they just get to the insured quickly, that's a big part of the battle. So they call the 800 number, they get somebody out there to adjust the claim, things get done a lot better. I would also stay involved in the claim process. Make sure the insured is comfortable calling you if they're having any issues. By all means, and same thing for you. You should have your claim contacts for whatever carrier you're dealing with to make sure you can get through to them quickly too. It's all about speed of adjusting these claims. Because if you think about it, in a construction project, time is money. We got to get them back working again as quickly as possible. Loss control. This is something I think a lot of people don't think about also, especially in builder's risk, but there's so many little things that can be done to prevent claims. We had a very sizable claim last year simply because there was a hot spot. We had a plumber that was welding, a little hot spot started. Nobody checked the job site at the end of the day. The fire started smoldering. The entire building burnt down overnight because they didn't check the hot spot. So as simply as having someone designated to walk through the job site at the end of the day, checking for hot spots. That's all they got to check for, hot spots. Or maybe you have someone walk through. Another big problem we have in builder's risk these days is water damage. So we have an existing building, we got people working on it, somebody leaves a faucet on, somebody has a pipe that's leaking, it happens on a Friday night, they don't get back till Saturday, maybe it's a multi-story building. Now we have a major claim on our hands, all because no one walked the job site looking for leaks. Simple as that. Just designate someone, I want you to go everywhere and look for a leak, see if it's even dripping slowly. So those are little loss control ideas. There's all kinds of things. We're used to loss control on workers' comp and some of that stuff, but on builder's risk, it's simple as that. You know, how do we protect the job site at night? We still get a lot of theft of copper tubing. So somehow we have to learn to protect that. You know, do we have fences? Do we have lights? Is there some simple ways we can lock it up to make it much harder for people to steal these things? Another thing that we run into a lot is we have subcontractors that are stealing from the general contractors. So we have to say, maybe it really does pay to vet the subcontractors, make sure they have a good reputation. Little tip for the GCs, most good GCs understand that. But I would also always talk about loss control with your insureds. I think when you talk about it, it makes the premium that they pay for this seem like a good investment. You get expertise claim service, you get good loss control. It's just a good way of doing business. So let's just to wrap this up a little bit. The question is builder's risk necessary? I think now I'd rather pose the question and say, how can you build something without builder's risk? I mean, I just don't think. Yeah, I thought to myself, what would happen if we had no builder's risk coverage in the business today? The line of business went away. How would all these buildings and different things you see being built, do you think they still be built? Do you think people would want to take the risk on their own? I don't think so. So I really think builder's risk is key to the entire construction economy. We need it. It's critical. It's a great line of business to make sure that anyone or any entity with a financial interest in a project has their risk covered. It's a way of predicting risk, of limiting the risk, controlling the risk, however you want to look at it. So that's kind of my soapbox of the day for builder's risk. What we're going to do now is open it up for questions. Let's see, I'll test on this real quick. So do you have any questions on builder's risk? Kind of covered a wide range today, but let's see what we got. Darcy, what do we got?
All right, Jeff, we've got quite a few questions already. First question, when does coverage end?
When does coverage end? All right, so that's another thing when we talk about analyzing the form you're selling. There's usually a number of aspects that are the same, but there's a lot of policies that respond differently. Think about the key, though, would be financial interest. So when your financial interest in that project ends, coverage probably ends for you. So in the case of a builder building structure, once the building's closed, you know, you do a closing on it and the financial interest is transferred to the owner, then the coverage would end for that builder at that time because they no longer have a financial interest. That's one thing. Some forms have, when the project is put to its intended use, coverage ends. You know, check that one out. Some will allow some occupancy. So somebody can move in the house for a period of time and still have coverage, but you need to verify the form. Those are some of the major aspects of when coverage ends. But to be on the safe side, make sure you pull the form, talk to your underwriter and say, when does coverage end on your policy? The underwriter should be able to tell you very clearly when coverage ends. Good question.
All right. Does builder's risk cover flood and earthquake?
Standard builder's risk coverage form would exclude flood and earthquake. So we consider those optional coverages. And all that means is you have to ask for them, pay an additional premium. So it would be incorporated into the policy, but you have to ask for them. They're not an automatic coverage like theft and vandalism and most other things that are automatic. So flood and earthquake are available as an optional coverage. And I would always offer those to the builder or the owner. Even if they choose not to have them, at least you've offered them. Good question.
All right, next question. Is water damage infiltration a typical covered cause of loss from rain?
Another good question. So it is covered on some forms automatically. Some carriers make you pay an additional premium for it, and some will not cover it. So, and a lot of times water would be like water intrusion in a job site. Over the course of a weekend, there was water damage to the interior of the building. Is it covered? Is it not? It really does depend on the form. Good question, but that's something you need to talk to your underwriter about. And it is now in the top 5 leading causes of losses. And it's really by a lot of those multi-story things that are going on. There's been some big water damage claims. So I definitely would verify what with the form that you're selling. Good question.
Okay. What is the best way to encourage an insured to continue their builder's risk coverage if they are 85 to 90% done?
Good question. So a lot of times first of all, from an underwriting standpoint, you're asking me the time that's the most exposed is near the end of the project. Because when you first start, maybe you have, 5, 10, 15, 20% of the total projects exposed. It's not too bad. But near the end, let's say it's a 12-month project and now we're in the 11th month and it's 90% complete. From an underwriting perspective, that's when it's all exposed. That's the most important time to have the coverage. The problem we have is some insurers look at it and say, I only want to cover it near the end. Well, that's not the way completed value builder's risk works. As an underwriter, what we do is we price it based on that exposure increasing over time. So we want to be on the project when it starts. We'll collect the premium up front, and then we will cover it throughout the entire process. So to me, it's easy to say, guys, if it's 85% done, you need to make sure you keep paying the premium or make sure that's in force until it's done, because that's when all your exposure is. So, good question.
All right. Next question. One of our attendees has seen that most carriers are not willing to write the existing structure, even if renovations are non-structural. Do you know why that is?
All right. So first of all, what we really covered today, I talked a lot about course of construction, and it was kind of geared towards a new project, a new building being built. Builder's risk can also cover renovations and remodeling type risks. And builder's risk there's really 2 exposures we're looking at. First of all, we're looking at the renovations and the cost of the remodeling that goes into a project. That's one aspect. And the other aspect, as you talk about, is the existing structure. There's a lot more exposure on an existing structure because once again, the completed value is there in the beginning from day one. It's number one. And number 2 is a lot of times it's an older structure. So you have a lot of exposure. It's almost like a permanent property exposure. So you have a lot more exposure on the existing structure. Now, our program will entertain that. We do ask additional underwriting questions. We're going to want to know precisely what is being done to the building. So the way you stated it is if it's minor structural or if it's cosmetic changes, that's not too much exposure. That's good. Issue we might run into those, is it a historical building? Is it old? We're not going to write replacement cost on that. It would be ACV only. And there's other questions. We're going to underwrite the surrounding exposures. If it's an older building and there's a lot of exposures around it, that might factor into what we're saying. As another thing on an older building, we're probably going to look at a picture of it to make sure it's structurally sound. We don't want to insure something that's going to fall over right after we insure it. So I'd say there are markets out there for you. You just have to find the right market that understands renovations and is willing to take that risk. Good question.
Okay, next question. What is the best way a builder can ensure small remodeling jobs? Should they get a builder's risk policy or maybe cover them under an installation floater?
So the way I've always looked at this too, the builder's risk is kind of, I don't know which came first, the chicken or the egg. You know, back hundreds of years ago when they created this form, was it the installation floater or the builder's risk? But the way I look at it is the installation floater was designed to cover only one aspect of a job, of a construction. So if you have an electrician and they want to protect their labor, materials, and overhead, and that's all they're worried about, then you write an installation floater for that electrician. It's not covering the whole project, only the electrical portion of that project. Now, you could argue that if the electrician is doing work for a general contractor and the general contractor has the proper builder's risk in place, the electrician's exposure is protected. But to be on the safe side, some subcontractors say, I want my own policy, I want to cover it myself. That's really their prerogative. I would offer that to them. So it really depends on your perspective. If you're insured as a subcontractor and you want to make sure 100% that their coverage is in place, you could write an installation floater for what they do. That's really up to you. Or you could spend, make sure you analyze the general contractor's policy that your subcontractor is working for, a little more involved. But I've seen it done both ways, and there's really no problem in doing it either way. So, good question.
All right, this one's more specific. With your program, can a builder's risk policy be written on an existing building that is being extensively renovated or a substantial addition is being added on to an existing structure?
Okay, so there's a lot of underwriting that goes into existing structures that are having work done to them. So the way we look at it is we take a hard look, and if we consider it a minor structural change, they're putting in new windows, they're putting a new roof on, not new roof trusses, just a new roof, new shingles. Maybe they're putting new flooring in or putting new fixtures in. Those are all minor structural. It might involve a little bit of structure, but not too bad. The things that are major structural that give us heartburn would be they're doing underpinning of a foundation. They're doing elevator work. They're doing staircase work. They're adding vertical square feet. All of those things are major structural, might not fit our program. Worth a call, we'll talk to you about it. We just don't know. So it really does depend on the scope of the project. So, when in doubt, call your underwriter and tell them what you got. Now if it's a horizontal addition and they're not changing the roof line, they're just adding a room on, that's minor structural. That's okay by our definition. So it really does depend on the scope of the project. Good question.
Okay, next question. With the pandemic, many projects are incomplete or insureds may not have the money to continue the project. For those that have a policy that expires or has already expired, how do you pitch to another carrier when it may take another 2 or 3 years to complete?
It's a tough, we'll say, how do you pitch it to another carrier? I like that. Yeah, because builder's risk, once again, is designed, course of construction, completed value. We go from a 0 round at risk to 100% in a finite time period. So when we write the project, when it first starts, we write it and you estimated it's going to take a year. Now, if it takes a little longer than that, probably not a problem. Just make sure you talk to the underwriter. We need to extend it. Maybe we need a second year's coverage. There's a magical time out there of 2 years. Once it goes beyond 2 years, all kinds of things are happening in the underwriting world, and it gets very difficult to write something after 2 years. The bigger problem is what you talk about, is we've had a delayed project in coverage. Maybe the project stopped completely because of financing, and then now it's going to start up again. How do you get that covered? The first thing the underwriter is going to ask, how long has the project been ongoing and how much of the project is done? Another magical time out there as far as If it's, like I said, if it goes over that 2 years, you got a big problem. If it's been delayed for any length of time, you got a problem. And then if it's more than 50% complete, you got a problem. I guess what I'm saying is a lot of these things, unfortunately, you might have to end up going to the London market to get something on an E&S basis, because the standard companies that write this line will probably shy away from it. So the key is write in the beginning correctly. Don't let it have any gap in coverage, and make sure they keep you informed on what's going on. So good question, and it is very prevalent today. I know we took a lot of the states kind of allowed us to expand and not cancel things, and so we did all that, but I think most of that's done now. So it's now back to kind of business as usual. So once again, the key to all of this, though, is pick up the phone and call your underwriter, tell them what you got. Good question.
All right, and with that, we are over time for questions, but if you had a question that was not answered, Jeff or someone on his team will reach out to you. And we can also show all of Jeff's contact information if you would like to reach out to him.
And just really quick, I'll touch on next month. We're going to dive into more of what the construction industry looks like from a data standpoint. We're going to take a look at the typical builder, the typical small commercial GC. I think you'll find it very interesting and very informative. It is truly educational as far as our deep dive into the construction industry in the United States. And we'll cover regional questions too. But as Darcy said, if you have any questions, give me a call, email me anytime. Our senior underwriter, Donna, is available too. So we would love to talk to you. Like to hear from you guys. A lot of these webinars come from questions that you guys call and ask me every day. So keep them coming. I do appreciate it. You got any unique exposures out there, give me a call. I find it fascinating to hear what's going on out there. So we're here for you. Call us anytime. What do you think, Darcy? Is that a wrap?
All right, that's a wrap. And just one more comment. We will be sending out a copy of today's PowerPoint slide and a recording of the presentation to all of those that have signed up.
Fantastic. Well, you guys all have a great day, and I do appreciate your time.